Welcome to the Scottish Property Podcast. This is a show where we aim to educate, inspire and entertain through real life stories and interviews from people in the Scottish property community.
As always, thanks for listening and give us a follow on social media and subscribe to our YouTube channel. Remember to join us at our monthly networking events on the first Wednesday of every month. Tickets are available on our website. So without further ado, we'll just cut straight into this week's podcast. Brian Gilmour, Indigo Square.
Yeah, that's me.
Great to have you back. You've been on the podcast. This will be your third time, I think. So, reason we asked you back actually because I was just saying there.
It's a TikTok superstar.
TikTok superstar. Our most viral video clip on TikTok. 1.3 million views. So, fantastic. We're hoping to get a good soundbite out of you today.
I'll leave my signed photograph after.
Yeah. You were saying you did a few people recognise you there on TikTok.
It was one of these ones where people kept saying, "You've appeared on my TikTok feed," and I'll be like, yeah, and I get paid nothing for it, you know. So I'm expecting my cheque at the end of this.
The headline was "The Shocking Truth About Unpaid Bills." So basically, your advice to people was that if you're in debt, you don't need to pay it back in Scotland.
More or less, because that's the way people are. And yeah, people will fall into two categories. There'll be the perma-rage, permanently angry people who'll be like, "Oh, yeah, this is why our society's rubbish," and then there'll be the other people who go, "Brilliant idea."
Yes,
I'll
great.
not do that.
True,
I mean, it
right.
does shaft your credit rating. It means you can never buy another property and all that stuff.
True. Well, this is not money-saving expert advice. This is the property market update for the month that's just passed. So we're going to go back on all the news stories and all the kind of talking points of what's happening in our industry. You're a letting agent, a property factor, property investor as well, aren't you?
Yeah.
So you've got first-hand experience at all this, and obviously we'll bring in our own views and opinions as well. I've picked out a few talking points here just to give the listeners a quick flavour of what we're going to be talking about. We'll touch on the rent controls, about the changes to rent controls and that protection to tenants ending on the 1st of April. It changes to the EPC, which will apply to landlords as well. We'll touch on the house price data, which is always a bit boring because it kind of staying about the same sort of level of growth. But we need to touch on it anyway. Our general outlook on the market, what we're seeing ourselves, and the general economy as a whole, really, and how we're all feeling about things. So we'll just start off with the general economy stuff, you know. There's a lot going on in the world, a lot of geopolitics, the Trump scenario that's just like constant day to day. What is he going to do next? I mean, ultimately, it will all end up playing out in the economy and in our pockets because, you know, what he does with tariffs and all the rest of it will, in some form or other, come through to higher inflation or something like that. So what's your general feeling at the moment about, you know, looking at interest rates, inflation, Brian? Do you have any views on the economy as a whole?
Not to sound like I'm some sort of economy and political expert, but my gut feel is, you know, if you listen to it, you talked about you can swear on your podcast. So the gist of it is that the tactic of the people behind Trump is you put out as much shite as possible. That's why it's him making announcements. You just permanently make announcements every second of every day. Therefore, people can't see the wood for the trees. You can then speak to that audience and that audience with two different messages at the same time because there's so much stuff. And I think actually what happened at the beginning was he's making all these announcements about what he's going to do. And I think the City of London and all these and the markets all sort of get their knickers in a twist. And then I think they realised, you know what, it is all just noise. Some of it's real and some of it won't be real. We'll just deal with it as and when. Mm-hmm. So I think actually, and I know I might be tempting fate here, but I think there's an element of, at the beginning, people were reacting to it. Mm-hmm. And actually it's what he really wants, is people stop reacting to it because, do you know what, it'll just be what it will be. Because it'll either be what he says or it won't be what he says, and we don't know. And it could, a bit like the tariffs for Canada that were happening that week, and then within 12 hours were not happening. I think that there's now an element.
Maybe the markets have got used to it now a wee bit because they talk about, and again, we're no economists here, right? But everybody's got their opinion about the news and stuff. But you know, markets, they always talk about markets don't react well to uncertainty. And if you've got politicians like Trump coming out with all this, that, and the next thing, but maybe they've just kind of got used to it now, so then maybe that's why things are not as volatile.
Yeah, because the uncertainty is actually the certainty.
Yeah.
The certainty is that there's going to be uncertainty.
I had a real life example of that on Saturday. Actually, I was speaking to a dad at my daughter's swimming gala, and he's in the whiskey industry, and their big customers were America and Canada, and with the tax get imposed by Trump. I was like, how are you reacting to it? And he goes, well, we were going to react to it, and we thought that he just keeps blithering shite, pretty much, and says one thing, does another, or doesn't it? And so they were planning, they were looking at other revenues, but they thought, well, why don't we just wait and see if it actually happens? So I thought, you're actually spot on at what you were saying there, is maybe the markets aren't reacting anymore to it. And
I think the certainty is that there'll be uncertainty, and so just deal with it as and when there's consequences of whatever he says or does.
It's crazy how much power one person's got, though, isn't it?
Oh, I know, but it also then emphasises something that I say often on the radio, which is we can't, these people in the City of London, for example, that is their day job. Every second that they are working, they are looking at what's going to happen, what's the consequences of this. Everybody else who up here doing their normal day jobs, what we're getting is second-hand from what they're getting, and what they're getting is second-hand from what actually happens. And so there's an element of you can't sit as a normal punter and second-guess what the international markets are going to do and how that's going to... So again, a bit of... you just have to deal with what's there and then, and what you know is going on in the moment that you're making your decision about the house move.
And I think talking to our core audience, which is predominantly property investors, and, we're looking at the fundamentals here. Interest rates have stabilised.
Went down again.
There's a shortage of housing, as will be for the foreseeable future, forever. You talk about this a lot, and we'll get on to that. And, supply and demand, basic economics. We don't have to be a city market trader or an economist to realise that generally it probably will be all right if you're just in it for the long term.
Yeah.
So from our investing point of view, for a buy-to-let property...
It's been a good month. Interest rates dropped again.
We'll talk about the interest rates a little bit, just touching on it to bring people up to date. The Bank of England base rate is at 4.5%. CPI inflation has crept up a little bit. I think we're hovering around 3% now. Some people were saying because of wage...
it's principally wages.
And obviously some people are saying energy prices as well are back up. But obviously the bank base rate, that reacts to the inflation. That's their kind of lever, isn't it, of trying to control the inflation. So it'll be interesting to see where that inflation goes, and whether they'll just accept that and the new inflation norm is round about that 3% rather than the 2% target, which I think...
So the pressure on the Bank of England from the government is growth. That's what the government's going to do. So, of course, traditionally, the Bank of England's remit from the government is to control inflation and to keep it, I think it's something around 2.2 or 2.4%, something like that. And so the only tool that the Bank of England's really got to control inflation is to restrict the supply of money, and that's to make money more expensive, and so you put interest rates up. That's simplistically how they do it. But if you restrict the supply of money, it's not just to the consumer. That restriction of supply of money is coming to businesses, and if the government's prerequisite is growth, then if you are too restrictive on the supply of money, you'll cap off growth. So I think there's a balancing act just now where the Bank of England are trying to keep an eye on inflation, and provided it's within parameters, I think their bigger thing is the government's stress on growth, and so that's why
there's a huge amount of pressure. I mean, under Labour at the moment, Rachel Reeves has already been getting her job called for already because they don't seem to be performing on this growth. So it's
but to be fair, I mean, I'm reasonably apolitical. To be fair, you can't turn around 14 years of shit, which is what it's been.
In a few months.
What is it? It's about 16 years of shit, because basically since the 2008 crash that we've had various restrictions on how the UK government spends money. If you want to then try and turn that around, that's really, whatever party would be in charge, that's not a 12-month job.
It's like being the Rangers manager, isn't it? You're not getting time.
No, and then you've got people telling you to do the complete opposite, who spend half their day sitting in a Weatherspoons drinking during the day and thinking they could run a business anyway.
Right, by the way, those listeners, if you're a Celtic fan, Brian has a Celtic podcast as well. But again, the Scottish Property Podcast, we don't align with any side of the city here. And we're not really into football anyway, but it's just if anyone's interested, Brian has another podcast. What's it called?
Celtic Underground has been going for nearly 20 years, so yeah, I'm a podcasting expert.
And he's also a co-host of the Scottish Housing Podcast
with Stephen Purcell, which tries to be different to this one and speak to decision makers and things.
Aye, the important people.
Turn us down.
So our mortgage brokers always tell us that not to look at the bank rate, but to look at the SONIA swap rates, the kind of interbank lending, and looking at them, there's some data to suggest that they're actually come down a wee bit as well over the last month. So that's good news for us investors. Fixed price mortgages, very competitive. I pulled out an article here. There's a heck of a lot of them. Buy-to-let mortgage products have hit a record high, 3,560 options, the most available since 2011. Again, that kind of competition in that mortgage market is good for us.
Yeah.
Hopefully driving down the rates. Lenders are having to come in with more better offerings, 80% loan to values and all the rest of it, which is good for some, depending on your outlook on debt and risk.
Yeah.
Probably don't want to really be going to...
Don't want to go back to the 125% days of the Northern Rock. No, don't want to be doing that.
Not.
80% even makes you a little bit nervous.
But that whole, buy-to-let market, it's interesting that, they're forecasting it to grow 14% in 2025 and a further 11% in 2026. But then you get all these other headlines to say that buy-to-let's dead, there's this mass exodus of landlords and all the rest of it. What are your views on these, stats or these headlines that, where are we at with the amount of landlords exiting the market? Where's your feeling on that?
My feel is a lot of it's scare story stuff. I mean, really simplistically, I had a conversation with a young guy in my office who's wanting to get into property ownership. And I gave him a real example of a property that I bought, and I can't remember the exact numbers now, and it was one that actually didn't have fantastic capital growth in it. But the point I made to him was I bought it with an 85% loan to value, and so it cost me. I mean, and so people sometimes when they look at property and they look at investment, they think about the house price number. Think about the real numbers. I put $9,000 into that property. When would it be? 19 years ago, and I'm selling it, only because I'm going to be selling that and buying something else. So it's not I'm getting out. I put $9,000 into that property, and I'm selling it and taking out. I think it's just under 50 grand that I'm taking out of it. So yes, I paid down some of the mortgage, but not all of it. I mean, for a long time it was on interest only, and the rent covered that cost. And so the point I was making to him was, if you stuck $9,000 in the building society in that 19 years, and you had reinvested it, I think I went on a compound interest calculator, and I think I got to 22 grand. He would have had if he'd stuck $9,000 in, not taking a penny out. So I've not taken money out of that flat. I've used money and reinvest and done other stuff with it. So same principle. His $9,000 would have turned into 22, whereas my $9,000's turned into 50. And that's the thing about
investment class
property investment. You can never. There's no other form of investment that if you're in it, as you said, Nick, for the longer term, the medium to long term, there is nothing that outperforms residential property. So a lot of this stuff that people are coming out with about, I'm getting out when this changes, it's a knee-jerk reaction to an irritation about the changes to legislation that are coming in. And yes, my tenants live in a safer house than I do, in terms of all the safety certification that we go through. But ultimately, even with all those restrictions, property investment still outperforms anywhere else that you can stick your money. Okay, you can have a bad situation where you have a bampot tenant who costs you money, or you can have a difficult situation where it's your sod's law that you need to get out of that residential investment just as the market is in a negative period. But that's the same anywhere else.
Any investment.
Any investment, you stick it in a, the safest type of stocks and shares investment would be a FTSE 100 tracker. That is absolutely the safest. And you could decide to get out of that the month that the COVID epidemic hits and the stock market prices fall. It can be your bad luck on anything. You can decide that you need to get your money out at a period of time when the Bank and Building Society interest rates that we just talked about for the bulk of the last 10 years have been at sub 1%. I think
that's what people miss can they think about as well, is your $9,000, you leverage the bank's 85%, but if you're putting that in the FTSE 100, you're putting £9,000 in. You're not putting £60,000 in like that, you're putting in 9. So your growth potential's so much smaller because you're not leveraging that banks, and I think that's where people miss. They always look at that higher figure. Oh, it's a higher entry point. I need to get 70 grand. No, you're only putting a few grand to get this mortgage, and then you're
look at the real return on investment over that period.
I mean, as I say to when I have come across the landlord who, with the new legislation, this is terrible and I'm getting out. Okay, let's take a mythical 100 grand that you're going to take out. First of all, you're paying capital gains tax to get that money out and out of there. Then where are you sticking it? Sticking it in a building society. Brilliant. I can find you a brilliant rate at 4%. And if you're in this for the medium term, if you'd have kept it in your property, you would grow at more than 4%.
Absolutely. No, just because I saw a stat, Scottish Association of Landlords did a survey on their members, and albeit, that's not the whole sector, that's just their members, but 53% of their landlords plan to reduce their portfolios in the upcoming 5 years.
Is it their member demographics just being that bit older?
But this is what I'm saying as well. Point to the listeners is that predominantly the landlords that we've had set up in our letting agency have been single property owners, landlords, accidental landlords, and they've just realised, and it usually comes to the point where they need to do the tax return that it's just not worth it now. So that's single property owners. So, and then the other side of it is the older, landlords who've really known the good times in the 90s.
Well, so I'm 55 this year, and I bought my first buy-to-let property in 2003, right? So I've been working at my proper business, so not massively on the flats that I own. If I was working on the flats, I would have a bigger portfolio of flats. But at some point in the next 5 years, I'll look to retire, and those flats are going to give me an income. But I might look and say, well, maybe I'll sell one of them to then give me some decent cash to go on some brilliant holidays over the first 10 years of my retirement or something like that. So there'll be other landlords, and you're right. If you look at the percentage of the housing stock in Scotland, which is a private rented sector, round about 2000 it was 6%, and then very quickly by about 2007, in fact just before the crash, it had hit about 13%. And it stayed static pretty much at 13% of our residential housing stock is private rented sector pretty much since then, because of the challenges of people in and people out, so it's paid pretty level. But what that really means is the bulk of our private rented stock was created 20 years ago, 20 to 25 years ago. That's when the bulk of our residential housing stock was created.
There's then a mortgage or...
So it's reasonable that most of those people getting in, it's very unusual for someone to get into buying and retaining private rented property at 20 to 25. The bulk of people who are starting a portfolio will have got into a job, be earning money, securing their job, securing their own home. Then they'll think about a second and third property, which is invariably from about 30 upwards. So if the boom started 20 to 25 years ago, then those people are hitting 55 to 70. So it's reasonable that a large proportion, are you going to be selling any of your private rented stock in the next 5 years? Probably. The follow-up question to that should then be, were you planning to do it anyway?
Or else, where's the opportunity? Because
I think
that's just where you're talking about portfolios and that.
Absolutely. Because if you look at our demographics, listeners, probably quite a lot younger or middle-aged that are starting and growing. Whereas I think Sal's
That's because we get TikTok influencers like Brian that then explore TikTok and bring these younger folk in.
Yeah.
But going back to that, the opportunities, this is where I think there's great opportunities, because these older landlords that are selling up, and this is where we go back to, obviously, the only thing kind of saviour in the whole ADS jump now up to 8% is that we've still not got we've got this, if you buy 6 or more properties in the portfolio. We've been told numerous times on YouTube not to mention that in case the government pick up.
Brian's more connected now, though.
So, buying portfolios with these older landlords, again, opportunities lie.
Absolutely, yeah.
Within that demographic.
There's that exit point, like Brian was saying, and there's the younger demographics going, we'll buy, and we've got an opportunity to save on this 8% ADS.
See your point about don't mention it. I think you can mention it.
Yeah.
Because I think if you look at what the government strategy would be, if we're going to have a private rented sector, we want professionals who know what they're doing.
Yes.
So would that be the only one incentive then that they'll
So the reason for the 6 is because you're wanting only people who know what they're doing
are going to buy the
in
multiples.
general can afford the 6 plus. So it's actually a disincentive to the lower end.
Institutionalises almost the private rental sector to the corporate.
Well, that brings us in nicely to our next talking point then, because we're talking about the government. Let's take a quick break, guys, from today's show to talk about selling your property with Prime Property Auctions. Now, myself and Stephen have both used John and Lewis from Prime in the past, and we can personally vouch for their service. They sell vacant and tenanted property, and you get to control the minimum reserve price so that you're not selling your property for peanuts. They pay for all the stuff like photos, videos, and all the marketing stuff up front, so you're not paying anything from the start, and it's a no sale, no fee. So if you want to check out Prime Property Auctions, then get across to the link on the show notes and speak to the guys. And we're talking about the housing minister. Let me just bring up the article here. So this is the housing minister who knocked us back for the podcast. Can you believe it, Stephen?
Oh, of course.
I'd been writing to
Doesn't knock everybody back on podcast.
Well, that's it. See, Brian managed to
you
get
have to grease the right palms.
Yeah, you have to know the right people.
Well connected.
Or have a podcast partner who knows the right people.
So Paul McLaren, who's been under a lot of pressure himself recently as well. So they should be politicians, you know what I mean? They should be held to account for these issues. But Scottish Housing Minister defends lifting private rent controls for 2 years. So this is the latest thing where, obviously, since COVID times, tenants got protection over rent increases.
Yeah,
they slipped this in quite quietly, didn't they?
So basically, it was a 0% cap, so landlords couldn't increase the rent at all for existing tenancies. Then it went to 3%, 6%. I can't remember. Anyway, the latest
went to 12.
12 the last
one.
But it was a complicated formula as to how you got to the 12.
So just to give the listeners a quick background, there's a housing bill going through Parliament at the moment for longer term rent controls and protection, which could be a number of years off. I think 2027 possibly by the time it comes into effect. And everybody just sort of thought, well, the current measures in place will just kind of continue on. You know, so like the tenant, and it was well publicised, it was well broadcasted. You would go down the street and on the bus shelters,
this was my point.
Big banners.
They put a lot of money they put a lot of money in the market in this to say that to the tenants, landlord can't put your rent up. But how was this backtracked? It was like subtly slipped in.
This kind of like came up, and I was surprised to see the kind of change of direction, because I just thought this will keep going until the bill comes into effect. So basically what they're saying is from the 1st of April, just to explain to landlords, tenant living rent, if you're listening as well, your members, you can still contest the rent increase, but the rent officer is now going to set the rent at the market level. So presume that's just from them looking at comparables that are advertised on Rightmove and all the other portals of what that market rent is. So this is going to cause a huge problem, because if you're going from, if you've been one of these landlords who's in your head, you've been kind to your tenant and you value a good long-term tenant.
Yep.
But at the same time, you're mortgage fixed term has come to an end and your mortgage rates jumped up, your insurance costs have your factors, fucking hate factors. Your factors has gone up.
Yeah.
Everything else has gone up. Your repairs, maintenance, all the rest of it. And then you're now like that. Wait a minute. I'm still charging that tenant £500 a month. Market rent is like 700. But I'll still be kind to my tenant and just maybe go to 650. Before they would have had that protection of like 12% after they call it a tapering formula and all the rest of it. But maximum was 12%. Now it's going to have it's like going to be set at £700 a month.
It's like a chance to reset before this housing bill comes in, isn't it?
I think it's to allow the everything to reset and then have the restrictions in. And there's a number of reasons, and some of it is. So I went to. It was actually the day before the coalition finished with the SNP, and obviously Patrick Harvey had a huge input.
If you had him on the podcast with it, because he was another one we were trying to get.
Yeah. So here's an interesting tale on the politicians should be held to account. We had a challenging tenant in our company had a challenging tenant in a property, and we were finding it really difficult. We needed to evict the tenant. We were finding it really difficult. And when I say challenging tenant, it wasn't particularly challenging to our landlord. He was just a really not nice person. Abusive to our staff when he did phone in, abusive to his neighbour, really just not good. And his neighbour is 4 in a block, and the person down below is contacting us, as people do to letting agents. Why aren't you doing something about your bad tenant? And we're doing everything we can. I mean, it literally took us 18 months to evict this guy because there was children involved and he was going to be made homeless effectively. So it's a difficult thing, and the tenant's giving us the person below's giving us real hard time. I mean, the guy threatened to petrol bomb his neighbour's car. When I say he's a bad guy, because obviously we had to provide evidence submitted by the neighbour about police arriving for antisocial behaviour and all this type of stuff. So I wrote back to the tenant and said, if you want to know why we're finding it so difficult to evict the tenant, write to Mr. Patrick Harvey MSP, because it's his decisions as the minister, this was when he was minister, that have made it more difficult for us to evict the tenant. She must have done this because we got an email from Patrick Harvey's office. Why did you tell the person to contact us? And I wrote back, said, because we can't evict the tenant for the following reasons, and these are all things that you have introduced. So it's for you to justify these. So if you can either go back to the homeowner or come back to us and justify all of these points that you put in place that made it more difficult for us to evict the tenant. Never heard back. Because he lives in fantasy land of everybody's nice and doesn't live in the real world where there's really not nice people out there. And so
it's very quick to project this image of the rogue landlords, which we know is a huge minority, but you get rogue tenants as well, believe it or not.
Do you know why? Because there are good people and there are bad people, and some of those good people are tenants, and some of those bad people are tenants, and some of those good people are landlords, and some of those bad people are landlords. So, but it was interesting. Went to Scottish Property Federation, had their annual conference, and the housing minister spoke at that, and the next day was when the coalition broke down. But he may as well have had a flashing neon sign above his, and he'd just been appointed at that point, he may as well have had a flashing neon sign above his head saying, I'm going to change the legislation. The housing bill's not going to be what it's laid out at the moment. He obviously couldn't say, I've now come in and realised it's a bag of shite and I'm going to change it. He couldn't say that. But he was conveying as much as he could about it was going to be changed. There's lots of consultation to go through before we get the final decision. And immediately...
Say something similar to this, Sal, sorry to interrupt you, Brian. Sal, about supporting landlords and the growth and all that and how they're going to work together, and it was the very next day that they put up the ADS to 8%. So there is mixed messages, but the real feeling I got with 2027, the next whole of direction is 2026. May 2026 is the next whole of election. So they're not, this housing bill
might be the can might be kicked down the road far enough that it doesn't even get a decision made before the next election.
I do feel that they are, and I mean, again, this is a very difficult one to juggle, the whole housing emergency. They're never going to be seen as, it's never going to be popular giving landlords more rights. Do you know what I mean? It's just the whole.
But I mean, my point, sorry to interrupt, Nick, my point about it is, well, I was at uni in the Housing Scotland Act of whatever it was, 1988, had just not long come in. And we went virtually 30 years without any appreciable change to the relationship between landlords and tenants. And then suddenly, since 2018, we've had 3 or 4 different pieces of legislation or emergency legislation that impacts the relationship between landlords and tenants. So the other huge thing for the Scottish Government, which is the reason why they're rolling some of this back, is the big rent-to-buy investing companies.
Build to rent,
sorry. They've said, while you're doing all this, it's this one, Donald Trump principle of it's one decision one week and one the next. We'll just walk away from Scotland. I mean, the
investment totally stopped, didn't it? Basically, it ground a standstill in Scotland.
And there was a guy at the Scottish Property Federation who made the point to the Minister, I've got £240 million to invest. It makes no difference to me whether I spend the money in Edinburgh or Vienna. He's pointing the fact that this is global money, which is incredibly mobile. Mm-hmm. And so if you just create uncertainty in Scotland, you just walk away from Scotland. And
what do you think will happen now then? Do you think these big institutional investors will potentially look at, there was schemes that basically were into planning and all the rest of it, I think they were just walking away from because of these rent controls. So do you think they will
eventually come back when there's certainty? Because the thing is, we have a housing crisis. We've got about 150,000 people
a market there
on our affordable housing waiting lists, and the bulk of them are not, they are mid-market to full rent that they can afford. So we've got a gap. I mean, it would cost the Scottish Government about £40 billion to build enough housing to fix, which is the entire Scottish budget, to fix the Scottish housing shortage. So that's not going to happen. So there is a gap for private investment to come in.
There's a lot to play out in this, like you say. There's still another election to come, Scottish election 2026. It is in the kind of legislation that the longer term caps will be consumer price index plus 1% up to a maximum of 6% if it does come into force. But again, if Labour get in, that could all change, like if another government get in. But definitely the best thing to happen was get the Greens out, and that happened. But you need to get Patrick Harvey on the Scottish Housing podcast, man.
I don't think
he left a mark there on the. And it wasn't a good mark.
No, and it was based on the premise that everything, as you said, everything's really simple. You've got the big bad landlords and you've got the poor hard done to tenants. Everything that he was creating was based on that premise. Now, for me, as someone who's been in property for 30 years, actually, the bigger challenge in Scottish housing at the moment that I continually talk about and none of this legislation tackles, and you mentioned factors, and it's really prevalent because factors have a massive role to play in this and it's challenging for them. If you look at Glasgow and Edinburgh, Scotland's got just under 500,000 pre-1919 properties. 60,000 of them are in Glasgow and 70,000 are in Glasgow and 50,000 are in Edinburgh, pre-1919 tenemental properties. So they're built 120 plus years ago, and the Glasgow tenements were refurbished about 40 years ago, so they're coming to the end of their working life in terms of the repairs that were done 40 years ago. Climate change, the way we get rain differs, and so rain's hitting parts of these old buildings that were never designed to get rain, and we've got our existing housing stock needs a massive amount of investment. So stop concentrating on fiddling about on whether a landlord can put his rent up 6% or 7% and look at the existing housing stock we've got and how we deal with the fact that needs a lot of money spent on it that people just don't have.
Mm-hmm. Yeah. For sure. I mean, it was interesting, like you say, when you try and get these people on to speak about it, they're quite happy to go on Radio Scotland drive time or whatever it is and do a wee kind of, a couple of minutes. But see, if you want to actually get them sat around the table and do a proper debate, they won't entertain we tried to get, this is interesting, if you're listening to this again, please reply back to my messages, because I've reached out to Living Rent, who the tenant union groups are standing outside Parliament and all the rest of it. I says, come on the podcast, we'll get a debate going, you know, like we want to know, you know, how bad we are as landlords and what we can do to improve things. You know, we know that there's good and bad. Like we want the bad ones out as well, by the way. Yeah. We want to get rid of the rogue landlords.
Absolutely.
Expose them.
They're no
come
good
on,
for the industry, yeah.
Come on and talk about them. And I've sent them a couple of messages now on Instagram. Nobody's replied back. Do you know what I mean?
They've probably blocked you.
Like, give you the back.
I mean, to me, you mentioned about Radio Scotland there. So even when a minister's on Radio Scotland for a long time would be 5 minutes, of which...
And not enough to dig deep.
2 minutes is the questioner asking him. So really, the person's got 3 minutes to stand on their own 2 feet and be able to think on their feet and answer the queries.
And generally, they don't answer the questions.
No politicians answer.
Correct. Yeah. So a long-form debate like this format, they shy away from.
Yeah, much better. Moving on to more landlord issues. By the way, that was a positive for landlords, so we should take that. Take it as a win.
Yeah,
it was a good one.
It was just that I thought it was really weird the way it was done. I didn't, you know, I'm like, for looking at the news, I don't see if it was well publicised. The only thing that I saw was it getting sent through by Sal. That was just slid through the back door. But the Scottish Government put this huge amount of investment in advertising the opposite when it caught in. But to reverse it was, here, we're reversing that, we're changing it. Like,
moving on, EPC update for people. Now this has been you're talking about kicking the can down the road. This can's been well kicked.
I've actually lost track. You're about to tell me stuff. I have lost track of where we are as landlords and our obligations on EPCs, because they have changed so many times.
Right, I think just the latest is that they're basically coming out with a new EPC rating system, because the current one's not going to be any good for moving forward. So that's the first thing. The EPC, this is a kind of big change, is that it used to be valid an EPC for 10 years, and even when it expired after 10 years and you had the same tenant in that property, you didn't have to renew it. You would only need to renew.
Change your tenancy.
Yeah. But now they're saying that it'll be reduced from 10 years to 5 years now. So that's one thing. I mean, not the end of the world. An EPC is only 60 quid. Minimum energy efficiency standard for PRS properties will apply from 2028. So that's their latest timeframe target. Gas boilers must be phased out by 2045. What are you doing, by the way? Like gas, I'm still putting gas boilers in my properties, because
like spoke about the whole Donald Trump thing. Yeah, you hear this shit, you deal with it when it comes to it, because the amount of people that we've spoken on the podcast, that when the EPC stuff came in a few years ago, by 2025 we're going to be minimum C. We're like, well, wait until that actually happens, because that's an unrealistic target for a start. And then what happened? There's people spending 10 grand extra every time they're refurbishing the property. It's good that long term it's more insulated and it's more fit for purpose, but you've went and put a whole lot of pressure on your portfolio, your cash flow, and your expenses for nothing at the moment.
And the other thing, if you read when they were saying it needs to be C, and the example I always used, I live in a sandstone semi-detached house. Right. And I don't know if I've got an EPC, but my neighbour, sold and had an EPC. Their house is very similar to mine, and they were a D, right? And on their EPC, because I looked at it. It was actually for going to talk about EPCs in the radio, and I looked at theirs, and they were capable of just scraping into a C by like 1 point. But the money, what they needed to do to make it a C from a D, wasn't really viable. Yeah. It was things like
strip all the laughing plaster.
It was clad the outside of the house, and I live in a sandstone house 1 street away from a conservation area. And when you looked at this was the other thing about it. When you looked at, and it was typical of how the government put these announcements out, it was landlords are going to need to be C by 2025, but we accept that there will be some properties that won't fit with that, so there will be further detail on that closer to the time. And you're reading that sometimes like 18 months out, and you're thinking, well, this is close to the time. If you're a landlord wanting to plan in repairs, we are close to the time. And I think it was they didn't get it. And I mean, EPCs have been a bugbear. Any landlord listening to this who's bought a tenement flat with an EPC and seen a first floor tenement flat and seen that one of the potential improvements would be to put insulation in the loft space, because it's just a one size fits all. It just it's not fit for purpose.
It's good that they're redoing it.
The only thing is,
how long that take?
They are changing, and I think Scotland's going to go to a score from 0 to 150, and England will retain a score from 0 to 100. So we will have a different rating system, which shouldn't impact us, but where it will impact, could impact. I always use Swindon, I don't know why, as a point of reference. Your stuff goes down to some mortgage processing unit with some 22-year-old in Swindon, and you've got a different number rating system.
You've got 106 and they're like, but it only goes to 100.
Yes, exactly, yeah.
You ever been to Swindon?
No, I've never been to Swindon. It's like Spinal Tap, put it up to 11,
You give Swindon a lot of airtime on the radio.
I know, I always use Swindon.
Right, property prices, right, okay, we're still growing in Scotland. So latest stats are from the Land Registry Scotland, up 6.9% annually over the last 12 months, 6.9% up. And just again, Stephen, I want to mention Aberdeen because, we've seen consistent positive growth there now.
What?
Up 3%, so it looks like
somebody's fudging the numbers.
You're getting it, you're climbing out of those dark
negative
years.
hole.
Yeah, so, and just touching on Glasgow, up 7.3%, Edinburgh 7%, Renfrewshire, I'm always saying to people, Paisley's a good area to invest. Renfrewshire 10%. That's quite good, strong growth. So, I just see that this year, just again, I'd like to see your outlook on the rest of the year panning out in terms of property prices, what they're doing. Brian, what do you think? Continue with positive growth?
I always use this stat as a way to ignore stuff you see on the telly about the UK housing market. And I ally it to my 30 years of working in property. So when I started in property, we'd had the 1992 crash, and what you had was big headlines on the telly about negative equity, which was down in London in the southeast. And in Scotland, our house prices stayed static. And if you actually look at the ups and downs of the Scottish housing market, the only time that our market really fell, I mean, there's always places, but as a wide the whole of Scotland, was after 2008, when it was a lack of availability of money. You just couldn't get money. All the other housing downturns relate to increases in the cost of borrowing money, not the availability of money. And the Scottish housing market tends, in general, not to have the incredible booms that the southeast of England does, and therefore it can cope with any downturn. So it tends to be much more gradual growth, and in times of downturn it tends to be more static than anything else. You're always going to have the exceptions because, of course, Aberdeen, when everybody else was falling in 2008, Aberdeen kept growing for 2 years.
Yeah.
And then, of course, from 2010, the Aberdeen market has been pretty much falling non-stop up until the breaks have gone on in the last 18 months, but 12 months. But it's starting from a really low base because it's been such a long period of dropping. But everywhere else, I think if you can get property growth that's in around wage inflation, if you can have property price inflation similar to wage inflation, it means it's affordable because people's salaries are moving in time with property.
Sales volumes are up, and I think estate agents, I've heard some of them moaning about it's not been as good as last year. But
I see a lot less stock coming to the market, and the stuff that I'm looking at, there doesn't seem to be as much stock coming through. I don't know if anybody else has seen that.
There's no, and it, so between 2002 and 2008, we had about 160,000 properties a year sold in Scotland, and pretty much since then we've struggled to break the 100,000 figure. So you can see that our activity levels are nowhere near where they were at the beginning of the century, to sound like an old man.
Maybe I read that wrong then about sales volumes.
No, but
they'll be up.
They are. I think they are up marginally, but
aye, marginally.
But the reason why individuals, I just look at it and just see more estate agents out there all the time.
So maybe that's why they're saying.
So everybody's share of the pie. So if the pie's grown by 12% and it's roughly 100,000, so it's 12,000 across the whole of Scotland. So that's 1,000 a month across the whole of Scotland.
The trend seems to be now, I don't know if you noticed, the American model is quite prominent now, where it's a lot of more independent, commission-based, like the Keller Williams and all that. That this is becoming quite a lot more. So you get all these people that are starting up. A lot of these estate agents are actually still doing full-time jobs as well and doing estate agency on the side.
And this is where my perception, just again sound like a boring old fart, and my perception is, see, if you look at Purple Bricks are a really good example. We're an online-only agent, blah, blah, blah. And they're on the radio all the time, and you see Purple Brick signs everywhere. And then obviously they have to pull down and draw down some of their media output for a period of time because they can't keep spending on advertising. And because they don't have a high street presence, to remind people that they exist, Purple Bricks boards start to disappear. And then they come back on the radio and Purple Bricks boards go up. And I think online-only agents, which is a lot of the American principle of Keller Williams and stuff like that, and individual franchises, they take an exceptional amount of hard work to keep you in people's minds, because the majority of your public are not thinking about housing every 5 minutes. And so who's available to sell my house becomes relevant at the period when you're thinking about selling your house. And if you see a nearby high street where there is people with premises, you know that they're still trading, and you go and speak to one of them. And if I now think back, the end of the high street agent was coming with the online only agent, and you saw the likes of Purple Bricks, and there was quite a lot of franchises that were online only principle. But they've sort of disappeared off.
They've pulled back off the
that
boat.
might change with it. For me, I do like the online personal brand. So if you build up a personal connection to somebody, like, I'm not talking about like a Purple Bricks would be like an online agent. But if you can buy into an individual, but I think Stephen Clark, if, for example, and I followed your content online, and I was like really liking what you did.
That's you.
And personal brand.
As a property investor,
that's the Brian's
who's invested in the market and is knowledgeable about market.
But you're right, the person that's going to go and sell that, think about property every 5 years or 10 years when they go to sell or go to move, they're not going to think of a personal brand on Instagram. They're going to just go, I don't know, there's the same high street agent that's been there for 20 years.
I think it...
No, I see, that I thought that 10 years ago. And the way that I've seen it in the last 10 years has made me realise you have them coming up and disappearing and coming up. And there'll always be a proportion of the market who are those people, but they will come and go and come and go. And I really do think having a high street presence to remind people that you exist
still holds a lot of value. Interesting. And just in terms of, again, for the rest of the year, property prices, hovering around, what do you think? I
think we'll see 3-4% growth through the course of this year. I think the scare stories about where interest rates were going to go have gone. I think it's unrealistic to ever expect them to be where they were in the region of 1-2%. I think if I think back to when I bought my first property, I thought I'd won a watch getting a fixed rate at 7.84%. I mean, I thought that was great. I think if we see interest rates kicking around the sort of somewhere between 3.5% and 5% is where I think the norm will be, unless there's some other huge shock that comes round the corner that we're not expecting. 3.5% to 5% is where I see interest rates being for the next reasonable period of time. And that allows certainty around the mortgage lending. It stops negative news about mortgage interest rates, which can frighten people off, and it can then see property price inflation at 3-4%.
You're a stat man, Brian. I'm going to put you on the spot here. Do you know how many empty homes there are currently in Scotland? It's all right, I've got ChatGPT here to tell you the answer if you get stuck.
I've got two figures in my head, one's 60,000 and one's 300,000.
It says, as of September 2024, Scotland had 45,538 properties that have been empty for more than 6 months. So anyway, I picked out this story. It was about compulsory purchase orders in Glasgow. There's a number of properties that have been bought up by the local housing associations and brought back into use, which is fantastic. Obviously, there's a lot of media and a lot of political stuff about this. Bring back the empty houses back into use. But, and this is one of the ways that they're going to solve the housing emergency. But it takes so fucking long. Look, listen to this. A Glasgow house has been empty for 13 years as amongst a number of properties that the council intend to buy up for homeless people. The owner of a house at 96 Woodville Street in Ibrox passed away in 2015, and this is them just getting round to doing the compulsory purchase, and bring it back into use. So,
it's a lot of red tape to go through.
Again, there's no quick fix to this. They're not going to bring in 45,000.
No, and it sounds like, because what they're trying to feed on is that principle of the big bad landlord who's got this property and he just can't even be bothered finding a tenant. That's how wealthy landlords are. It's part of that myth around the wealthy landlords who just... They're the whole problem here. It's nothing to do with the fact that we've just not built enough houses. It's part of that myth. And again, it's a very basic principle of. So nearly 40 years ago, 35 years ago, when I was doing my degree, there used to be a thing in Scots law called prescriptive title. So you could find a property that nobody knew who owned it. And so what you could do is you could then go and put what's called prescriptive title on it. You could say, that's mine. But it took you 7 years, and you had to prove that you had gone over the top to try and track down the owner of that property. Now, that doesn't exist anymore, but the principle of why it would take so long for that property is because, there's a building we factor in. When we took over management of the building, the owner said there was 11 properties, shops and flats, and the owner said, see that top floor flat there? It's empty. The lady died about 5 years ago. We know she's got a son. We think he's in Germany, and that's all we know. So we took over that building and then just divided the bills by 10 instead of 11 because we'd no idea. We have done everything to try and track that guy down, and we can't find it. We had to actually break into the flat because there was a leak to try and get it. And so the issue is you can't just go and grab a property because it belongs to somebody, and there might be a reason why.
I do get that, right? But maybe they should bring in some sort of legislation. If they really do want to go down this route of bringing all these empty homes back in, then they need to have some sort of legislation, some sort of time limit, right? If you're not going to claim this in so many years, right, we'll give you fair market price for it, compulsory purchase, we'll keep it in an account for you and just hold it there for when your long lost relative does come back for it or something like that. I don't know.
No, you're right, and you've got to take some steps to do this, because again, if you look at that building, for example, there was a greater burden on the proprietors of that building. We did a £30,000 repair on that building. Right. There was a greater burden on the other proprietors of that building because we had to take one share and split it amongst everybody else.
See, with the compulsory purchase orders, I'm not really sure how they work, but I presume they do give you fair market. It's got to be market. I presume it's market value.
Yeah, it is market value, but how do you determine market value? As we know, it's that's why, for example, if you drive around parts of Glasgow, that's why you'll see occasionally a pub standing on a corner that's on its own, because it used to have a tenement building wrapped round it, and when they bulldozed the tenements, they offered the pub's market value, but the market value that they were offering was the bricks and mortar market value and not the value of the business value. Right. And so the pubs were then saying, no, we're not taking it. And so what they were doing 40 years ago was bulldozing the tenement around the pub and then saying, basically they were trying to kill the pub by saying, we'll take your customers away. Yeah. And 40 years later, some of them still exist.
It's obviously not that straightforward with the compulsory purchase orders as well, because there's that site down in Port Glasgow that they've been trying to demolish, Clune Park. Don't know if you've seen that in the news. There's a lot of publicity about that. They've been trying to get that demolished for years and years by buying all the owners out, and I don't know the whole ins and outs of it, but it's obviously not that straightforward.
Well, look at when they did the Commonwealth Games in Glasgow. And there was one family who stayed in the property and voted themselves in. And
so there's a lot of but again, that's the whole thing about this country, the whole bureaucracy, the whole red tape. We're trying to solve a housing emergency. We need to change. We need to do something to try and change the system. It looks like they're making progress a little bit down England by trying to reform planning and stuff like that. We need to start taking a more progressive approach up here. You speak to decision makers.
Yeah, but the problem is always the unintended consequences of what seems like a straightforward answer. I remember listening to a podcast with Sajid Javid, who was the health minister, and they said, what was the biggest thing you learned when you became a minister? And he said, I then understood why every decision took so long, because you thought what was straightforward, and you would have somebody come along and say, you do know the consequence of doing X is Y, and that side effect could be huge. So the problem you've got with compulsory purchasing then starts to be, well, all the potential possible side effects of the government, the state being able to go in and just randomly start buying up property. And somebody turning around and saying, wait a minute, that had, some sentimental value to me with some extra special family heirloom in it, and you've just destroyed it or whatever.
There's always, like you say, a consequence to every policy.
Yeah, I mean, very, very simplistically, as you quite rightly point out, I couldn't remember whether it was 60,000 or higher, but it's 45,000 empty homes, right? So you're still going to have you get every one of them back in, right? Firstly, how much would it cost to get them back in circulation? Some of them are empty because they're in such a state of disrepair. They might not be the size that we need to resolve in a certain location. You could have 10,000 one-bedroom empty flats in North Ayrshire, for example. And North Ayrshire's housing list is full of people needing family homes. So you could do those 45,000. It could cost an absolute fortune to get them back on stream. And you still, even if every one of them is perfect, you've still got 110,000 people on the affordable housing waiting lists.
It's not one size fits.
You have a lot of these conversations, with Stephen on your podcast, and obviously decision makers and all the rest of it. You must have your own thoughts about how to solve this housing emergency. Apart from just build, we can't take the answer, just build more houses. No, so that's the obvious.
Yeah, so there's a lot of issues to do with it. So one of the reasons, and when you say just build, it's not just the state's got to build, right? It's private enterprises got to build. And one of the things that happened as a consequence of the 2008 crashes, between 2008 and 2010, we used to have a lot of medium to small builders in Scotland. Anybody listening to this will be able to rhyme off names that no longer exist, that were pulled down by the banks and by the behaviour of the banks. And they were excellent for building 50 to 100 properties a year. Now, might not sound a lot, but if you've got a lot of them, if you've got a lot of those builders that are building 50 to 100 properties a year, every year, and they tended to have a really good local reputation. You've still got, I mentioned Ayrshire, somewhere in Ayrshire you've got someone like Hope Homes, who locally in Ayrshire have still got a great reputation. But you used to have these firms, they've all gone. So you need to find the environment.
And the reason why they're gone?
Well, it was the banks. The banks was the reason why they went.
But what about the government stuff? I bet it's just too complicated now for them to get planning. They don't have have the financial clout to just sit on land banks, until they're ready to wait for the market to come back to.
So there's multiple reasons why they went. So the government needs to then look at the financial environment to make it advantageous for those firms to come back. The cost of goods. I was speaking to a contractor the other day. He was telling me that a pallet, just immediately before COVID, a pallet of typical slates for a Welsh or Scotch slates of 600 would be about 600 quid, and that same pallet today is £3,000 in terms of. Construction inflation's gone through the roof. And then you've got other things. If you speak to a house builder, they will tell you that about 30% of the cost of building anything is underground. Because the minute they want to build on a site, immediately Scottish Water will turn around and say, well, the sewage system that you're connecting into is inadequate for the additional burden that you're going to place on it. So they immediately find themselves... The
government stopped paying for combined water supply to get from 2008.
You're not just upgrading here, you're upgrading the sewage works out here as well. And the same with electrical substations. So the government can input. It's not a simple case of the government have to spend all the money to build all the houses. The government can spend lesser money, but on
helping the small builders.
Helping the small builders with the combined services. I mean, again, there's a builder I know who was doing the sort of steading conversions. And he was creating maybe 10 properties. Might not sound a lot, but in a small rural location, 10 properties might make a difference. But those additional costs have made him work out that the optimum size for him is now 4. So he's dropped down from, they were doing, steadings of 10 at a time, and they could turn them round inside 18 months, and they've moved up to the fact that they could run 2 at a time. And as I say, might not sound much, but if you manage to multiply it up, but they've actually scaled back, because 4's the optimum number in terms of the additional utility supplier costs. And then there's planning. I saw a list, and I wish I could remember it. It was the volume of planning applications that have been knocked back in Scotland in the last 12 months. It was absolutely enormous. I mean, I'll try and send it through to you so that for the next podcast you can stick it on. And so you need to then work on planners. But the problem then for planners is, if you've got a situation where local authorities are screaming because they say that their budget's not enough, they're looking around for cuts in the budget.
There's no planners.
So there's not enough planners. So you can do all you want in terms of easing the planning legislation, but if you don't actually have the planners to process the planning applications,
they're not going through quick enough.
Where I would like to see more emphasis is, right, because I think in terms of like actual social housing in UK, Scotland are actually doing relatively not too bad.
Massively outperform. England roughly have built the same as Scotland, taking into account that England and Wales are 10 times the size of Scotland, yet the actual physical numbers are about the same as us.
And the only new build development they actually see around Glasgow is from Wheatley Homes and stuff like that. And it's, they build some good, they're building some good stuff, but obviously we need more. But for me, it's like, we're talking about build to rent, and obviously that help. We need the private investment as well, right? The build to rent, all I'm seeing really, the 2-3 that have been built in Glasgow, it's quite high end. They're just inflating rents. Rents just putting rents up crazy, like £1,600 for a 2-bed or whatever. Where I think that it needs more supply is in the family, 3-4 bed houses. These should be going up by the 300, 400 developments out in the outskirts around East Kilbride and all the rest of it, these family houses.
Yeah, so
for rent, for private rent.
And so there's 2 parts to that. So one of it is just one of the people to do it that would help with the market is private builders. Tell me the names of builders.
Like Wimpy, Miller, what are these big builders you're talking about?
You'll come up with 3 names. The point I'm making, and that's it. We just don't have that. So then there is, and so there's a bigger thing, because there's also the capacity in terms of apprenticeships for training people, so that we've got enough brickies and joiners and plumbers and roofers to do it. I mean,
labour costs is going through the roof.
Well, one of our contractors, his niece is an optician, and his roofers are paid more than his niece. So his roofers earn a bigger salary than his niece, who's an optician, who you would normally expect to be the other way around, and that's to do with a short supply of labour, so we need to do more training on the staff. But in terms of affordable rent, so the challenge you've got as well with the housing associations doing it is the big pension funds in the UK do want to they want to invest in housing, because of why we talked about why private landlords should invest. Your £9,000 in gets you the big return. They want to invest in it, and they want to invest through housing associations. Legal in General, for example, they're sitting on about £26 billion of our money. It's pensions and the like. So they need somewhere to invest that. Housing's a brilliant place to invest it, and housing associations are brilliant to invest it, because
low risk.
Very low risk. They have a AA rating from the likes of Standards and Poor's for them to borrow the money. But I'll give you a real story of me sitting down with the 2 most senior officials in the Scottish housing. It's 10 years ago now, and I'd worked on a proposal. I'd engaged with Legal in General and what I was doing at the time, so we could, there was money there to be had, and I said, look, I've worked on this, and I've found a way that you could build more houses for the same money. And they said, why would we want to do that? And I thought, well, I'll maybe explain this wrongly. And I said, right, okay, well, I found a way where you could build the same number of houses for less money. I'm sorry, Brian, I'm not getting it. Why would we want to do that? And I said, well, because you want to get best value for taxpayers on all of this. We've got a target of how many houses we're going to build, and we don't want to smash it, we don't want to underachieve it, but we don't want to massively overachieve it, because if we overachieve it, it then means the target next time will be even higher, so we want to just achieve it. And that intrinsically for me was the problem. So you look at the housing associations, the level of governance that they have got means that they have to be, I mean, you want them to be risk averse, because you don't want them going bust and people, driving around white vans evicting people from social housing in Scotland, right? You want them to be conservative, but they are so massively risk averse because of the way that the regulatory system is built up around them, which makes it incredibly difficult for them to borrow money. And an example, again, spoke to someone from a housing association about a way that we could, what we were working on, they could get 5 million quid to go and build the 50 houses, the 50 flats they were wanting to build. And the chief executive said, I've got 4,500 people on my waiting list. If I take your 5 million quid, it will increase my grief exponentially, because it would have an impact on other lending guarantees that you've given. And at the end of the day, I'll still have 4,500 people on my waiting list. Mm-hmm. Building those extra 50 houses for him wasn't worth the potential grief that could kick in from him borrowing that money. So the point being, it's a multifaceted solution. It is about looking at the regulation of the housing associations that allows them. They have capacity to borrow far more money than they borrow. It's about looking at their regulatory setup so that they can borrow more money. It's about investing in planners so that we've got more planners who can pass the planning consent. It's about looking at what we can give to the incentives to the small builders to get them back in the marketplace. Aye. And it's about having training so that we've got the people who can actually build the houses.
For me, you hit the nail on the head there when you talked to those two government officials, right? And they said, why do we want to do that? Right, for me, that's where politicians should be removed from this problem, right? There should be an independent body set up aside from the government to solve this housing emergency. Bring together the best people in the industry, make it separate from the politicians, and then I think you'll get some progress.
There you go. You can stand in the next election.
No, not politics. No way. Thanks very much, Brian, for coming on.
Thank you,
Brian. Appreciate the time, Brian.
Brilliant. Give listeners where they can come to.
So the Scottish Housing Podcast, they can go into that, and I'll not bore them with the football.
It's the second best. It's the second best property podcast in Scotland.
Myself and Stephen Purcell, yeah. So you can get that, and then they can listen. They can listen to me every second Tuesday on K Adams if they want. They can phone in and ask their questions.
Thank you very much for joining us. Take
Cheers.
the time.